Welcome, everyone. Welcome, everyone. We'll get started very shortly. Just give it a little bit more time for people to arrive.
Coming? You got finish the updating?
I appear to have finished the updating.
Okay.
Now it's attempting to launch the meeting.
Okay. So I'll just turn this off once you get it.
Welcome, everyone. We're just going to have a few more minutes and then we'll get underway. If we could ask everyone who's joined us to kindly mute themselves on their Zoom, then we'll be able to hear the speakers without any background noise. Thank you. There should be a little icon that looks like a speaker in your lower left of your screen. That's helpful information to just make it, just touch it, just click it, and it'll go red the way Annie and Leslie's are, and then you're muted. Well, in the interests of keeping this nice and timely, I would say let's get started then. Good day, everyone. We're so happy that you decided to join us on this webinar, and you'll be spending some time with us learning more about Green Century Funds. There is a chat box at the bottom of the screen. If you have any questions, we'll try to address them at the end. And we will be recording this, so just be heads up on that. Today, we'll hear from Leslie Samuel-Rich, the president of Green Century Funds, and Annie Sanders, our director of shareholder advocacy.
Are you on, honey? Shall I come there?
We'll have a short presentation, and then we'll have some time for questions and answers. And we're going to share some information on our investment strategies and a few stories about our shareholder advocacy that makes a positive impact on our planet. So I'm now going to turn this over to Leslie.
Thank you so much, Pam. And hi, it's nice to see you, Joanne and Mary, and maybe others out there. As Pam said, I'm Leslie Samuel-Rich. I'm the president of Green Century Funds. And I'm going to walk us through a little bit about Green Century so you know more about us. So on the first slide with the pretty picture, you can see we've been around for more than 30 years. So we're not new to this field. We're based here in Boston, though we have people working in other parts of the country, and we manage about $1 billion. One of the hallmarks of Green Century is that we're the first family of we're one of the first families of fossil fuel-free mutual funds. We're also a leader in our award-winning shareholder advocacy program, and Annie Sanders is going to tell us more about that in a minute. And if you didn't know, Green Century has a unique nonprofit ownership. Starting back in 1991, groups came together to start Green Century. And so 100% of the net profits we make on managing those funds belongs to those nonprofit groups. And as you may know, we offer 3 different mutual funds. We have a U.S. equity fund, we have the Green Century MSCI International Index Fund, and we have the Green Century Balance Fund. And more near the end of our presentation, I'm just going to go over those three funds in some more detail, and then you can ask questions about that if you'd like. So on the next slide, I want to go through first the investment strategy side and then how we deliver impact for our investors. So the first part of it is using something called ESG data. That stands for environmental, social, and governance. And those are three different risk factors that we look at and look for in companies, with the idea that if companies manage their environmental, social, and governance risks, they tend to be a better managed company. It may reduce risk to the fund, and it might increase performance. The next way that we really do the value alignment for the funds is through our screens. And screening is keeping out industries or companies that you just don't want to invest in. And so for us, we've had a robust set of screens since the beginning, and they include tobacco, nuclear energy, nuclear weapons, genetically modified organisms or GMOs, as well as the more traditional, socially responsible screens of alcohol and gambling. And in the Balance Fund, we also don't invest in companies that are factory farms. But the hallmark of our funds is our fossil fuel free screens. So for that part, we exclude any companies involved in the exploration, extraction, processing, refining, or transmission of coal, oil, and gas. And so those three components exist in all of our funds. And then on the other side, where we really can deliver impact that's measurable in the real world, we have our shareholder advocacy program. And what that does is leverage our power as shareholders to push companies to be more environmentally responsible. And we've been running this program for decades and have a lot of success. And the second part, again, is supporting environmental programs through our nonprofit ownership. And as far as we know, we're the only mutual fund in the US wholly owned by environmental and public health groups. So now let me turn it over to Annie to talk about, Annie is our Director of Shareholder Advocacy.
Great. Thanks, Leslie. Nice to see everyone here. So I want to talk a little bit more about Green Century's advocacy, which we feel does stand apart. So we pursue advocacy work in three main ways: proxy voting, company engagement, and then the actual advocacy work to create the real world change Leslie talked about. For proxy voting, we believe that proxy voting is the responsibility of every mutual fund, and we vote our 600 plus proxies in-house according to rigorous sustainability guidelines. And that allows us to support our own and others' shareholder proposals or resolutions, as that helps to demonstrate broad shareholder support for proposals relating to environmental issues. And then we also engage companies. So we believe that contacting companies and engaging with them in dialogue is an important practice to gather information about their practices and risk mitigation efforts. We don't believe that just sending a letter or having a call is engagement, though. We actually look to achieve discernible outcomes. So on that note, we work to press companies to change their policies and practices, as we feel that's essential to reducing risk and making impact. So that's the shareholder advocacy piece to create real world change. So at Green Century, we advocate for companies to certainly measure their environmental impact as a critical first step, but then ultimately to change their practices to, for example, source more clean energy or cut single-use unnecessary plastic packaging, get rid of deforestation in their supply chains, cut their carbon emissions, and more. And we have a 4-person team right now. So there's myself and 3 advocates who engage upwards of 80, 90 companies every year. So on the next slide here, some stats from last year. We engaged over 60 companies and voted more than 600 proxies in-house. We filed 32 shareholder resolutions at companies across our portfolio. And then we, from those resolutions and other dialogues, secured 20 concrete environmental policies from some of the world's largest companies. So I'll highlight a few examples here. On the carbon emissions and clean air front, we engaged Costco in recent years. It's one of the largest retailers in the world, as folks probably know, and asked Costco to commit to reducing climate emissions for their entire value chain, so all their operations in 2023. They eventually did make that commitment at the end of 2023, so just a couple months ago. And that commitment came after about 70% of shareholders supported a Green Century proposal asking Costco to do just that, to reduce emissions from producers, shippers, and other partners. So that was a pretty exciting victory. And then on the plastic packaging front, we engaged Coca-Cola and over a couple of years, and ultimately worked with the company to announce a new goal that they would have at least 25% of all beverages sold globally distributed in refillable bottles or containers by 2030. So 25% of beverages that Coca-Cola distributes will be refillable in refillable containers by 2030. It's the first known goal of its kind. And currently, reusable packaging accounts for just 16% of the company's beverage portfolio. So this will be quite a jump. And then that's, as we note here, the equivalent of 200,000 bottles per minute. So that's a pretty impressive impact. And then finally, I'll just highlight one victory on an issue called right to repair, which some folks may have heard of, but essentially it refers to the idea that people should be allowed to fix their own stuff, whether that's cell phone, medical equipment, tractors, you name it. If it's your product, if you bought it, you should be able to fix it. And this is actually, unfortunately, somewhat of a controversial issue, only in that sometimes companies don't feel that same way. I think most people would agree with that sentiment. However, we are making progress on this. So technology giant Apple announced it would expand its self-service repair program just this past year to its newest iPhone and Mac models. And that commitment was a really big win for consumer rights and efforts to combat e-waste, which is our angle on it. And that came after Green Century Funds initiated discussions with Apple back in 2021 and submitted a shareholder proposal later that year that asked the company to, in fact, consider the environmental and social benefits of making its devices more easily repairable by consumers and independent repair shops. So exciting progress on that front, and we will continue our work throughout the rest of this year on a whole host of environmental issues.
Thanks. Now, the next slide is just some examples of what our nonprofit owners are working on. I don't know where you're calling in from, Mary and Stephanie, but the owners, they're called the Public Interest Research Groups, or PIRGs, and they exist in many states across the country, from California to here in Massachusetts and in between. In Washington State, they're called WashPIRG. It's not the greatest acronym, but we've learned to live with it. They and other state PIRGs work to push Amazon to eliminate those blue and white plastic envelopes that they mail out all their products in. It's just, they're full of plastics, and we needed to move them to more recyclable content, and that's what happened. Here in Massachusetts, we're working hard to protect pollinators to ensure that we have a sustainable agriculture system. And then as Annie just talked about, our right to repair, we've been working with companies directly, but in Colorado, they actually passed a bill that makes farmers have right to the first right to repair tractor bill, so that they are not wasting time and or breaking their warranty by having someone fix their tractor. And then on the next slide, it's just an overview of the three funds that we have. So one of the original funds is the Green Century Equity Fund, and that follows one of the longest running sustainability indexes. They invest only in US companies. The middle fund is the Green Century MSCI International Index Fund. That invests in the 22 of the 23 developed countries. So what that means is that it invests in all the developed countries except the US. So these two funds do complement each other. They don't really overlap. And the last one is the Green Century Balance Fund. That is a little bit of the more one-stop shopping for someone who wants to not manage different funds in their portfolio. And this fund brings together stocks and bonds in one fund. And it's made of about 60 to 70 stocks. And then the rest is in fixed income or bonds. And we've been steadily growing the kind of bonds that are in this fund. And now we're up to 70% meet the international green bond standards. So that means the proceeds of those bonds go to finance climate mitigation projects or water improvement projects all around the globe. On the next slide are some company examples of what's in the funds right now. The first is a company called Vestas Wind Systems. It's based over in Denmark and it's in the International Fund. And as you probably can tell from the picture with the man standing on a global wind turbine, that Vestas is involved in that production of wind turbines. And in fact, accounts for 18% of the global wind energy production. The second company is Ecolab. That is in the US Equity Fund. And Ecolab helps other companies ensure their food safety, maintain clean environments, and optimizes that water use. And so already it's protected 1.8 million people from infection and saved 206 billion gallons of water. And the last is an example of one of the bonds in the Balance Fund. We have some corporate bonds and we have some municipal bonds and we have some international bonds. This is an example, and it's the first corporate sustainability bond, came out by Starbucks, which I'm sure everyone is familiar with. And I really like this bond because it directly trains farmers on how to grow coffee more sustainably. So it's obviously beneficial for Starbucks, but it also is helping farmers all around the world create a sustainable coffee supply and coffee business for themselves. So using shade trees, learning how to grow the coffee beans using less water, which is obviously a critical resource, and also using less pesticides, which is better for the environment and better for people. And then on the final slide before, and if you have any questions, please feel free to put them in the chat. And this is a sample of our resources. So on our website, we have all these fact sheets and more. So the first one is about our shareholder advocacy highlights, some of the things that Annie mentioned. The second is that if you're not an investor yet and you want to know why you might want to invest fossil fuel free, well, we have a fact sheet explaining not only the moral and ethical reasons, but also some financial considerations to take into play. And the third is an explanation about our green bonds, including, again, our Starbucks bond, but other bonds listed on the other side. And that concludes my comments.
Well, thank you everyone for joining us. I think we've learned a little bit more about how Green Century funds can help you save for your future while creating a positive impact on the planet. If you're an investor, thank you. If you're thinking of becoming one, we encourage you to do so. And if you found this webinar helpful, please share the link when we send it to you afterwards with friends and families. We are now entertaining questions. If anybody who's here would like to unmute themselves and ask, otherwise we can put them in the chat box and take them from there.
I see a question, PM.
Okay.
It says, where can I find more information about Green Century shareholder advocacy? That's a great question. Thank you for asking it. You can go to our website, which is greencentury.com, and go under the resources tab. And you can find these fact sheets that I mentioned and also our guide to fossil fuel free investing.
There's the
Uh,
link. And then if you want to know more about some of our recent work, you can also go to the press releases page, and that's got all the current information about our engagements and public information regarding the work we're doing to move companies to adopt more environmentally sustainable practices.
Thanks. I see another question. Thanks, Patrick. There is a minimum. We have 2 share classes of the funds. I'm guessing most people on the call would fit into the investor share class. That's for individuals generally. And for that, there's a $2,500 minimum for any of the funds. But if you didn't want to do that, if you put in $1,000 and sign up to put in $100 a month, you can also invest in the funds that way. And I know you didn't ask this, but you can directly, the next question is, you can directly invest with Green Century through our website. But if you already have an account at something like Schwab or Fidelity or one of the other platforms, our funds are available on all those platforms. So you can look by name or by ticker, which is available on our website for those funds and make your investments that way. And then finally, if you have a financial advisor and you're gathering information to, or if you are an advisor and you want more information, you can invest through your advisor. And if there's any problems, you can always contact us on our 1-800 line, and we're happy to help walk you through, opening an IRA or rolling over an IRA. Say you have something from a old employer and you want to convert it over. How are the funds different from each other? The funds are different from each other. In the equity fund and international fund are different from each other in the geographies of the companies in which they invest in. So the equity fund invests in companies that are based in the US. And the international fund, by its name, invests in companies that are not based in the US. The international fund does not invest in something called emerging markets. So it is more established financial markets and places for the international fund. And the balance fund is principally US companies, though there's usually 1 or 2 international companies. For example, Unilever is in the balance fund right now. And the bonds, which is the big distinguishing factor, is also in the balance fund. The bonds act as and are set up to act as a ballast to the stocks. So hence the name balanced. And a lot of people tend to use that in their retirement accounts, especially if they don't want to pick multiple funds and build their own portfolio. How are your returns generally in comparison to the S&P 500? They vary. And I think the biggest variable is how fossil fuels are performing. So in many years, we were beating our benchmark because being fossil fuel free was a real advantage. Sometimes that's not the case. But to look at the returns for any of our funds, we have fact sheets on our website, and you can see both the recent as well as 5-year and 10-year comparison. And maybe someone can just drop in the link in the chat so that Stephanie, you can go right directly to that. The equity fund uses the S&P as its benchmark. So we're comparing it directly to a non-ESG or screened portfolio with the S&P. According to Reuters. That's a really good question, Denitza, if I'm saying that right. There was a decrease in demand for ESG funds. Oh, hi, there you are.
Well,
It-
first of all, I want to congratulate you for all the amazing work that you are doing, creating win-win scenarios for the NGOs that your main shareholders for you, and also for this advocacy program that you are running. So amazing, and these funds that you are having. So, but I have like this question on my mind. So if you can answer me, perfect.
I can, yeah, no, and thanks for all of that. A lot of the decrease seemed to come from investors who recently came into funds that use ESG criteria. And for whatever reason, they went into a fund, and if that fund hit a bump or something in performance, then they quickly withdrew from it. And so we have not seen those kind of outflows, and I think it's because our investors come to us obviously seeking competitive returns, but also they're more value driven. And so they not only want to, invest in companies that they feel good about, but also see the impact. And so there's more things that keep our investors invested than if you're just trying to chase the market sometimes. And also a lot of the investments and the redemptions seem to come from new funds that had just started using ESG criteria. And that's all they used was that ESG data maybe. And maybe their performance wasn't as good, or there wasn't that much else to keep investors in there. I think overall, there's been this highly publicized sort of attack on ESG. I think it's been mostly confusing. No one knows what ESG is as an ordinary person. And so it's mostly just confused people and sort of frozen them a little bit, especially when the market was not doing as well this past year. So we've been on a quest to really explain, what goes into our funds and what sets us apart from other mutual funds and other mutual fund families. And this webinar is one of those ways that we're doing it. This is our first webinar that we've just opened up to new investors or prospective investors, and we're really
Thank
glad
you.
you're all here.
A little bit. So what's the next step for Green Century Funds?
As the fund family, well, we're always looking to add more investors. We're also looking potentially adding more funds. And then, as you may have picked up from Annie's presentation, we are always looking to do more shareholder advocacy. And so right now, the shareholder advocacy program runs like a school year. And so we started in September, and right now we're sort of in the middle of midterms and preparing for finals, which is the annual meetings. And our advocates are now negotiating hard with companies to get some more of those wins that she shared with you.
Thank you so much for answering my question, really.
You're very welcome.
Might be worthwhile spending a little bit of time talking about how what we do is different from competitors who might just make these claims for marketing reasons.
Sure. I think there's a few differences. And first, it starts with the investment strategy. so that we are a firm believer and user of these screens or ways to keep your investments out of environmentally dangerous companies. And so there's a lot of products out there that don't do that or don't do it as thoroughly. So for our fossil fuel free screen, for example, I went through all the different pieces of it. There are competitors funds out there that say they're fossil fuel free, but it's not a regulated term. No one is defining what it is. And there's another firm that has a fossil fuel free marketing. But if you look closely, it only applies to 80% of its assets, which means, and it does hold gas companies in it. So the devil can be in the details sometimes. And so what's, funds that just say we're sustainable or things like that. Again, those are words that are just kind of tossed around, unfortunately. And you really just need to look at how it's constructed. And I know that can be overwhelming sometimes if you don't have a financial advisor. The easiest way to see if there's fossil fuels or not is to look at something called the allocation or sector allocation. And what you want to be looking for is where it says energy, that you want to see 0%. If it's not 0%, it means it holds traditional or dirty energy. The renewable energy shows up in different categories. So just to answer that in case anyone was thinking, well, where does that show up? Because that is something that we do invest in all the funds. The other difference is around our shareholder advocacy. We have one of the biggest teams of shareholder advocates in the country. And as Annie said, we're very focused on measurable outcomes. And so a lot of firms can describe their engagement and they have lots of numbers, and activity does lead to more outcomes in some cases, but just talking to a company and raising concerns is different than talking to a company, following through with negotiations, and if needed, filing a shareholder resolution and then going back to the table to negotiate. And so we're really focused on changing that company policy and then following up with the company afterwards to make sure that they are following through on their commitment and doing what they say. And the third thing is our ownership. Again, that's just very different than being a firm that's on Wall Street and owned by a select number of individuals or a bank or something like that.
Well, we are now at time. I want to thank everyone who joined us for sharing part of your day with us, and I invite you to explore the resources and impact sheets on our website. If we didn't get your question or if you have follow-up questions, just reach out to us at info@greencentury.com, and we will share this recorded link for you to review at your leisure or send along to friends and families. So thank you again. We really appreciate your time.
Thank you. Great work.
Thanks all.
Nice to meet you all.
Thank you.